There's a Wall Street rally happening now after the latest jobs numbers. The economy may be stronger than expected. 139,000 jobs added in May, coming in above expectations. Unemployment has been steady for several months. NewsNation's Alicia Nieves is live at the New York Stock Exchange with some analysis as we go into the weekend, seeing things in the green, a positive start.
Yeah, certainly a good day for Wall Street today. As you pointed there, major averages across the board in positive territory following this jobs report that came in better than expected. It was a bit of a Goldilocks report, and I say that because, listen, we did still see fewer than expected or fewer jobs added than the previous month in April, but more than the expectation, that 139,000 number. Again, the expectation was 125,000. We also saw the unemployment rate. That ticked right in line with the expectation at 4.2%, leaving it unchanged. And again, that right in line. Another number that economists were really focused on within this report were the average hours worked in a week. Really key here, that came in unchanged. And that was a focus because, listen, they were looking to see not only are we going to see fewer jobs added, but our employers pulling back in the hours worked. We did not see that happen. So a good read on the unemployment rate and the unemployment report this month, following what the expectation was, which was a worse than expected read. The president this morning taking to Truth Social, kind of making a victory lap on the read, saying, quote, "America is hot. 6 months ago, it was cold as ice. Borders closed, prices are down, wages are up." The president also posting another post a few minutes later after this report, trying to budge at the Fed, trying to get the Fed to do a rate cut, saying, quote, "Too late at the Fed is a disaster. Europe has had 10 rate cuts. We have had none." Now, this report, while it is a good report for the labor market, showing the labor market is able to withstand some of the impacts of the Trump's tariffs, there is a concern even within this report, and the president himself pointed to it in the wage rate. That was up about 0.4%. That's going to lead to potential concern around inflationary pressures, and that's the reason why the Fed likely not to do a rate cut when it's expected to make a decision later on this month on June 18th. So a good report for the unemployment and the labor read this month so far, but not likely to lead to a Fed rate cut. Markets, though, in the meantime, rallying just on the news that the tariff impact wasn't as much as expected, Marni.
All right, Alicia, thank you.
Thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.